So the people that already know how I trade the fibs, you already know what's up. This would be, like I said, beginner friendly for anyone that is trying to understand the fibs if you ain't seen them yet, or if you've already been watching them. So I'm going to get right into it. Also, y'all can just ask me questions in between as well. If you need me to pause, I'll pause it for you and we'll keep it pushing. This will be uploaded today as well, like today or tomorrow. Ramel, you gonna record it, right? I need him to record that for me. I got to. Yeah. All right, bet for sure. All right, let's do it. So, what pre-market design is? These are the first principles of exactly how I trade. I trade using a tool called Fibonacci, but it's not the normal way like people use them. And it's just so crazy that like one day y'all crazy in the chat. One day, me and Romel was just like in a room and we was looking at the charts and we was thinking, we was like, let's throw these fibs on ranges, because the original way that I was drawing the fibs was actually started from the weekly. And then I would utilize two fibs. And he uses ranges with Holy Grail and finding that order block that was responsible for the breakout of that range. And we was like, okay, how do we incorporate both of these concepts? And we said, bet, what if we just threw fibs on the ranges and applied the direction model with the sequence of entries? You know what I'm saying? If there's a Holy Grail in our discount region, then that'll be buys. If there's a Holy Grail in sales, it'll be sales in the premium or whatnot. So let's get into it. What pre-market design is, it says, pre-market design operates on fundamental truth. Market levels are predetermined by historical price action. Price does not move randomly. It auctions within defined ranges. And those ranges produce repeatable Fibonacci auction zones. This market function as continuous auctions where buyers and sellers compete for control. Price gravitates towards equilibrium, creating predictable behavior patterns within established ranges. And it says these ranges exist before price reaches them, forming a blueprint that governs future price action, hence the name pre-market design. A lot of people, when they hear pre-market design, they thought like it had to do with everything pre-market, you know what I'm saying? But no, pre-market design pretty much saying everything's predestined. All of our levels, they're predestined. Like we'll draw a fib on a macro range and not have to draw out our fib for like days at a time, possibly even weeks, you know? And then we can also draw fibs with inside a micro range where that range will only probably last us just New York session. You know what I'm saying? But it's not even based on sessions. It has nothing to do with time frames either. A lot of people always ask like, yo, what time frames do I draw my fibs on? And I'm just like, it has nothing to do with time frames, only ranges. There's ranges inside of ranges, inside of ranges, inside of ranges. Y'all chill in the chat, bro. Y'all niggas just listen. Fuck all that. Like, I don't care. Y'all know me, I'm direct. Like, listen, bro. Yeah. And then we got the 5 core principles of PMD. Like, yeah, for real, stop all that. Niggas is really trying to teach, bro. Like, chill, bro. The 5 core principles of PMD. PMD is obviously pre-market design, okay? And it's crazy, like Romel said, these levels line up with inducements. And what are inducements? Order blocks, liquidity, freaking fair value gaps, imbalances, all of these different levels, they always align with our Fibonacci levels, premium, auction, and discount. So let's get into that part. It says the 5 core principles of PMD. Number 1, market operating auctions. So that's how I look at the market. I look at the market like auctions. When something gets too high and too expensive, the price has to decrease. When price gets too cheap, price has to increase. That is the nature of everything in this world. Everything. So now that I know that, it's like, okay, I realize, like I say it all the time, that people have great entry models, but they don't have a good direction model. You have a great entry for buys, but price is already in a premium and you don't know that. Or You have a great entry for sales, but price is already in a discount, but you don't know that. And since you don't know that, you think that you had a bad entry when the whole time you followed every rule in the book, but you lost that trade based on the nature of the market. That's where PMD comes into play. And it says, every price movement represents sided auction between buyers and sellers. Understanding auction mechanics replaces the need to predict direction, which is another reason why I tell people don't trade with a bias. Trade the market through the lenses of no perspective. Because when you come in the market with a bias, you subconsciously look for any and everything that supports your what? Your bias. It's just a natural thing that you're gonna have. It's natural. As a human, the moment you feel entitled to your thought process, you're stuck to it subconsciously. There's nothing that you can do about it. So I like to trade without that. I like to look in the market, literally like without caring about anything that's going on. I have my levels. I see my holy grail. I see my wick sauce. I see this here. I see this here. And I let the market play out. I'm a reactional trader. That's what I would say. And that's what I try to teach. I try to teach people to be reactional traders. Like reactional traders for real. Like there's no need for you to sit here and try to find an entry when the market is literally telling you what it wants to do. Market is a book. The language is the candlesticks, and it's your job to read the story. That's it. But there's no need to sit here and try to scroll through hella pages trying to understand the book. But if you just follow price action and you read from page 1 to 2 to 3 to 4 to 5 to 6, etc., you'll find the story. And it all starts from these ranges, right? So it says, ranges define behavior. It says price always operates within a range. These ranges have boundaries, averages, and zones of acceptance that determine future price action. Which is why later I'm going to talk about order flow, market cycles. It says Fibonacci meets equilibrium. The Fibonacci ratios identify where balance shifts within a range. These are reaction zones, not reversal points. That's another thing. Define whatever range you're in doesn't mean that it's necessarily a reversal, just reactions, which is why I don't like using or saying the word support and resistance. Instead, I just say like, yo, this is a pivot. Because if I'm looking for a resistance level for sales and I got a limit, but I'm not following the market cycle, I'm not thinking like, wait a minute, that same level that was resistance can flip and become support. Because now you're entitled to thinking that you're going to sell. Yeah, same with you? Yeah, you say POI, yeah. Point of interest. Point of interest, exactly. Just a point of interest. Because this area can get flipped at any moment. That's where you have to incorporate market cycles. Understanding once a level gets tapped, that level has to follow through. There's a lot of times where I'll take a buy off my 786, which what I'll explain later. And then somebody will be like, yo, wouldn't we sell from our 382? And I'm like, technically, yeah, but you have to let the cycle of this trade follow through. But people don't get that concept and they get stuck in bad trades. When in reality, everything about their entry was perfect, but they didn't understand the cycle of the previous reaction that we had in price. The same way how the market has to sweep liquidity before it goes, it also has to reward the people for good entries. Like, that's crazy when you think about it. So you have to understand that battle between when the market is sweeping liquidity and when the market is rewarding people for good entries. That's what you have to understand. That's like, and then when you understand that, you have this mental flow of understanding order flow. And when you get that, it's like, and the fibs do it. I'm telling you, it's so crazy. I'm telling you, it's so wild. And then you have your inducements at these given levels when you already have that awareness of the market cycle. You'll see a holy grail at the 618 fib, but you know that holy grail entry already got retested. But then you see a liquidity pool at the 786. So instead of taking that 618, you take the 786 because you understand the market cycle. But technically, you should have taken the first one. But since you understand the cycle and you have that mental order flow model in your head, you're able to just take entries where it's like, damn, because you visually see it. when you buy all those order flow models on NinjaTrader or whatnot, it only shows you the information like right after or like in the moment. Our levels are visually on the chart. Like, for example, Alexia, I don't know. She put this chart up here. She took a sell from our 236. The 236 should be red, but it's fine. She took a sell from our 236. The reason that sell worked out is because previously in price, it reacted off of that 236 multiple times. And she understood the order flow, how price broke through the 236 and failed to retest it. So she knows, now she knows that, okay, when price comes back up to this 236, it's most likely going to reject. And what's to the left of that 236? It's the order block. That's still an inducement. That's just a simple example. Okay. So now it says levels exist before price. Yeah, the order block got flipped. Exactly. And that's how you know. Another thing, that's how you know, like, you know the difference between a fair value gap or inverted fair value gap or order block or inverted order block. You will understand when price inverts an order block when you have that mental order flow model in your head. Because you know that this level has been broken through however many times, and then you'll know when it needs to retest. Just wild. So that's wild. I don't even get all the way into technicals, bro. Like I swear to God, this is probably the most technical you'll ever hear me speak. Like all day in my chat, I just be saying 786, 236, 236. It's crazy. But it says levels exist before price. And then it says market structure creates levels in advance. Price discovers these levels through auction activity, but they are predetermined by range itself. I'm gonna say that one more time. Y'all typing a lot. I want y'all to listen. It says market structure creates levels in advance. Price discovers these levels through auction activity. They are predetermined by the range itself. And that's Romel came up with that. I didn't even look at it like that because he deals with ranges. He showed y'all. He just cooked with y'all, showing y'all bearish ranges and bullish ranges and how price has to respect everything in this range until it breaks out. And then that's the indication. So you're able to catch the continuation based on the order block that was responsible for that breakout. Boom, you caught the correction before the continuation. There's your ICC. And then magically you threw a fib on there and it lines up with the 618. Boom. That's how we trade in. Confluences. So, another thing. It says execution is mechanical. It says once you understand auction position and range structure, which is simply order flow, that's what I'm saying. Once you understand auction position and range structure, execution becomes systematic. Becomes a systematic response to predetermined conditions. I'm gonna say that again. It says once you understand auction position and range structure, execution becomes a systematic response to predetermined conditions. Then the market just becomes predictable. Then you don't give a damn about losing. Why do y'all think I trade live? Why y'all think I trade live is because I don't care if I lose. I just realized, shit. Yeah, I know I look light skinned as hell. Hold on, bro. I gotta use a black chart because y'all was just on my ass earlier. I can't even do myself like that respectfully. Y'all better not say shit in the chat. Bro, hold on. Cause nah. No. That's crazy. Alright, so look. Just give me a second, because I was prepared to use a black chart. It's cool though. Give me a sec. I mean, I was prepared to use a white chart. You white, bro? Nah, trust me, gang. I ain't white, man. My girl talking about chill. All right, so look, my bad. Give me a sec. Let me just get this fib structure right, proper, real quick, just for a second. All right, let's make it right. I know it's All right, cool. It should be cool. Puerto Rican. I got Puerto Rican in me, but it's not my native. Charts. Listen, look. So if you drew a fib, what's the last game? He don't want the lights. Bro. Look, we gonna draw a fib from top to bottom. Listen, lock the fuck in, please. Damn, man. Hey, bro, and then y'all get mad and be like, Z, why you not in VIP? Yeah. Z, why you not in community? Nigga, look at you. Me. Let me stop. I'm trolling. I'm really trolling, y'all. So look, yeah. So look, when price is bearish, right? And you draw a fib from top to bottom. Start from top and you draw the fib to bottom. That's what I'm saying. Yeah, for real. Like, bro. Top to bottom. And you have your levels like, 236, 382, 618, and your 786. Okay? You got your main levels. At these levels is where you want to take your trades in the direction of price. Okay? So when you hear me say execution is mechanical, once you understand auction position and range structure, execution becomes a systematic response to predetermined conditions. So when you see a chart like this, which I will show you down here, where's it at? I actually I have one. This is this one. Yeah, I have a chart over here where I give an example for you. But when you have a fib and you see prices going bullish, all you're simply doing is looking for breakouts and retests of these levels in the direction of the trend. So what that will look like is, I'm doing a diagram now because I got to show y'all proper examples and then show y'all on the chart. And this is like, mind you, if I take off the fibs right now, this is literally how price action moves. Yes, I know it's man-made, goddamn it, but this is how price action moves. Sometimes it's choppy, sometimes it breaks through, sometimes it does all of these things. We have the macro trend, which is just down, and then we have micro trends in between. You know what I'm saying? So I just want to draw out like good price action so y'all can understand properly. So y'all understand, because I was just going to give an example off the chart, but I'm like, okay, I want to show them what textbook pre-market design is so that when they see it not textbook, they understand the fundamentals, and then they can, take it on from there. So, like I was saying, all you're simply doing is taking breakouts and retests of these levels in the direction of the trend. So, breakout, retest. Now, here's the thing. How do you determine a reversal before it happens? There was a strategy that I had a while ago called SPC, swing pivot confirmation, right? Where a price had an inducement to the left, so something like this, it needed to have an inducement, had an inducement to the left, which caused price to continue going in its natural direction, but then failed to continue. So now I apply that same model, then I throw a fib on. So when I have my swing, before this swing low is created, how do I know it's going to actually reverse? Is by simply throwing on a fib within that range. And seeing, are we going to break through or are we going to continue? And price will continue, and then I will take the breakout. Simple. As soon as I take that trade, I know that I'm in my first cycle. So understand, follow me. When I take that first trade, I understand I'm in my first cycle. Okay, I'm intending for price to reverse from here, and I'm taking the first leg of this buy, bullish. I'm in the first cycle of this upcoming bearish range. Know this. You cannot forget this. If you forget this, you will get fucked up in between. You will get messed up in between. So you need to understand, I'm in the first leg of this bullish trend, this upcoming bullish trend. So you're in the trade here. You're in the breakout. You're in the breakout. I don't know why my shit's so damn big. All right, you in the breakout. How do you know? Now I know what people will ask is, how do you know when this trade is going to continue? How do you know when this cycle continues? You know based on the 50% of this range. So now I know it may be confusing, but I'm gonna make it all make sense later on. So we have these levels here. Let's go ahead and draw this out. Boom. Boom. And we just do it, brush 50%. I gotta make it white. Goddamn, because y'all was on my level. Y'all was on me. I gotta make my chart black. Boom. You got your premium, your auction, and your discount. Y'all already know about this. You know what I mean? Premium, auction, and discount. So I meant to incorporate this in the beginning. Yeah, this is your discount, this is your auction, this is your premium. The intention of these levels is so that when price creates a discounted region or comes down to a discounted region, it's supposed to buy. When price comes up to a premium region, it's supposed to sell. And you know it's guaranteed because it's within inside the confinement of this range. It's not just randomly placed on a trend. If you place a fib on a trend, anything can happen within that trend. But I'm drawing out the whole entire range that governs all the trends in between, which is why I say the high is the father of price action, the low is the mother of price action, and the family is everyone in between. The levels have to react off of the nature of this market because this is the nature of everything. Like I said, when something is too expensive, it has to fall. When something is too cheap, it has to rise. And we understand that range based on these Fibonacci levels. Example, like I said, you take the breakout of this range, price reacts. You take the retest of this range, price reacts. Price goes bullish. And you're following price action throughout all of this. You're finding confluences as well as inducements. So you will say, what you're going to say is, if price is reacting off of my 236, and I know we're about to get a retest, is there a reason for price to retest this level? If there's no reason for price to retest, you're in a bad trade. If there's a reason for price to retest, you're in a good trade. There's two things to the trades I always take. I need to make sure that something pushes price away from my stop loss and something that pulls price to my TP. I need something magnetic and I need something to induce something away. So if I'm taking a buy, I need that to be an inducement for buys. And if I'm wanting to buy, I need something to pull price to my level. So if I know I have liquidity above me, that's a reason for me to buy. If I have an order block that needs to get tapped above me, that's a reason for me to buy. If I know that price needs to make an indication or simply fall into an imbalance, that's a reason to buy. Because another reason why a lot of people lose is because they'll take a good trade, but there's no reason for the market to increase. There's no reason for the market to go up. There's nothing for the market. What's going to catch the market? Because in order for the market to sell, it needs, other than manipulation, the only way for the market to sell is for there to be an order block or liquidity or inducement or an imbalance or fair value gap. But if all of that has been tapped, why does the market have to go up? And when you know that, you know what to prevent. So if price action is buying right here and I see we have liquidity above me, that's my magnetic pull to hit my TP. I know this mentally. I don't have to draw this shit out. When I say trading is more psychology, but this isn't even psychology. It's just something that you know. I'm trying to teach you something. I'm trying to make, no disrespect to people, but some people aren't just competent. Some people just don't have the level of understanding these markets. I'm trying to force that into your head. That's what I'm showing all of you. I'm trying to show you order flow in the mind so that you understand what not to take and what to take and when to take it. And then I'm trying to show you a reason to take your trades behind if we have any inducements above us. Because if we're taking buys with no inducements to push this back down, why the hell would I take it? If I'm taking the sell, but we have no inducements to push me back up, why the hell would I take it? Because the market needs to catch itself. If there's nothing to catch itself, it's just going to fall and bleed. Does that ever happen? No. So this is why when y'all take trades, you get blown the hell through. Like the other day, I took a buy on NQ and I lost that shit. This shit just went straight down because I realized, oh snap, there was no reason for the market to go up. And then it created liquidity and then went up. Then I was like, ah shit, okay. Understand that the market engineers itself before it reacts. The market creates pre-liquidity before it sweeps liquidity. So search for that liquidity before you take that trade. It's certain things. It's just like I can't teach you these things. I can't show you this on a chart. Or I'll be on the charts for 5 hours a day. I'm trying to show you it within your head without even showing you a chart so that you understand what to look for. It's so weird. Like the way that I teach is by engineering your own mind to search for something that it doesn't really know what to search for, but it knows how to search for it. It's weird. It's so weird. And I don't even have to teach you. Like, for example, Alexia, Vaughn, AJ, Rodney, Douglas, Joey. They learned the fibs. I've either A gave them now. I never gave them a one-on-one. Like Alexia, I never gave her a one-on-one. Vaughn, I gave them one-on-ones. These people literally just took the fibs and learned it by themselves. And I was like, okay, they understand what I was trying to teach them. They understand this. I'm teaching y'all the secrets of my fib. I never explained this to any of y'all before. Vaughn, you've never heard me explain it like this, but this is things that I've already known. I just didn't want to make it big, but now I'm like, okay, I'm finna really give it to all of you. I'm trying to explain all of it to you because the fibs ain't based on them on a damn 786, 618, 382, and 236. That's just a visualization after. But before that, it's all you have to understand what to take and what not to take. Because if someone's sitting here like, yo, price isn't think about it. Yo, forget the fit. Like, bro, this is gonna be crazy. Watch this. If someone's like, yo, Z, this is a downtrend. Price is respecting the trend. And we tapped the 382. And off this 382, we had inducement to the downside. We taking sales, right? Technically, you're correct. But based on the cycle of the market and how this reversal played out, your competent is incorrect. So it's like, while yes, you are a great trader, but this is why you lose. Because you don't understand premium, auction, and discount. Oh, yeah. So now I'm gonna show you. Let's go back. I low key forgot about the file. Damn. I was getting into it on the chart. All right, so look. Premium, auction, discount. All right, so now let's get into the what you call it. Screenshot that diagram in the lab chat. I think somebody. All right. All right, bet. Yeah. I got you. I'll do that right now. Hold on. Take this off. Yeah, I got you right now. Hold up. Bet. Screenshot it now. I should have had Grim letter for me. I already had it. I'm gonna just put it in here. Just download it. Everybody can have it. Right. And my boy, I was saying about a screenshot because you be getting screenshots real quick. All right, for sure. So you see how price reacts off of the discount, and then you see how price reacts off of the premium. When price reacts off of these levels, then you understand that go to the opposite. When price goes to the opposite extreme, then you know price may be either A, break out to the downside, or B, break out to the upside. So let me just get back into the file, understanding these ranges. So premium zone, it says price above equilibrium, statistically expensive, favored for selling, and unfavorable for buying. It represents an area where sellers have control and buyers are trapped. Equilibrium, the average of the range. Fair value, price naturally gravitates towards this level, acts as a magnet center where auction finds temporary balance. And then discount, price below equilibrium, statistically cheap, favored for buying, unfavorable for selling, represents the area where buyers have control and sellers are trapped. The difference between my 50% premium, auction, and discount and most people's 50% is that they only take trades off of discounted 50% and discounted premiums. I understand the whole premium, the whole equilibrium, and the whole discount. So now we understand the whole premium, equilibrium, and discount. And most people just take trades off of the 50%. Now, I'm not even saying 50% of the fib. I'm saying like either 50% of the order block or 50% of whatever range. Now you can you can customize these fibs. You don't have to draw out the fibs like me. You can low key, you want to draw out a fib on an order block, 15-minute order block, then scale down to the 5-minute time frame, and then find an internal order block at the 786. Oh shit! Now you know exactly where to take your entry. Shit like that. Like, you know what I'm saying? I'm thinking about things like that. For the people that know, either Vaughn, if I'm gonna say it again, like, or no, not Vaughn, Ty. If Ty were to use the fibs, I can see Ty sitting here being like, yo, not Ty, Romel, my bad. If Romel sat here and used the fibs and he didn't even want to use them like me, he would know and understand what to look for. He will understand the premium, auction, and discount of this order block, the premium, auction, discount of this imbalance. And then when you scale into a lower time frame, you look for an inducement on the fib of that order block. So now you know exactly where to put your damn limit. Instead of just putting your limit at the 50%, you know exactly where to put your limit now. So people can use the fibs however they want. I just use them based on ranges, you know? So yeah. And then we have range hierarchy, macro versus micro. Let me see. So it says the nested structure. It says price is always inside a range, but ranges exist within larger ranges. Understanding this hierarchy is essential for proper Fibonacci application. Macro ranges control overall directional bias and long-term auction behavior. Micro ranges control execution timing and entry precision. All right. And then we have a bullish macro range may continue bearish. Wait, no, start over. A bullish macro range may continue bearish. Wait, what? It said macro range may contain. A bullish macro range may contain bearish micro ranges. Fibonacci levels are only valid relative to their specific range. So you can have a bullish fib, you can have a bearish fib, have a bullish fib, and have a bearish fib. It doesn't matter as long as it resides within inside of a range, everything is fine. All right. And then you got the Fibonacci application. So I'm gonna just give everybody this file. I'm gonna just drop it in here. Y'all can run with this. Whatnot. But this is the Fibonacci application. Y'all can take screenshots or I can just send it in here at the end. Or whatnot. But this is the fib that I use. All right. PMD, Fibonacci levels. If anybody asks me again, if anybody ever asks me for my fibs, I'm not even gonna like respond, low key. I'm not gonna lie. You got 107 people in here. 107 people, that should be able to get out to everybody, bro. Cause you know how many people ask me what's your settings start today? Damn. All right, cool. Now, critical rules. Now pay attention. Damn, how he take them screenshots that fast? I ain't gonna lie, bro. Yeah. That nigga an asset. Like, what? That's he providing value. Like, he just, like, instant. Like, what? He top ticking, bottom ticking these levels, these pages. Like, I ain't never seen that before. That's insane. All right, look. So it says critical Fibonacci. Damn, see, I ain't even shit. All right, see. All right, look. I'm over here flabbergasted. That shit crazy. All right, critical Fibonacci rules. Right, Fibonacci, here's step one. All right, listen. Step one, Fibonacci must reflect the range, not the current leg. I'm gonna say it again. Fibonacci must reflect the range, not the current leg. So a lot of y'all be drawing a fib on a fucking trend. I said draw the fib on the goddamn range. Not being mean. Draw the fib on the fucking range, not the trend. Not being mean. Range, not the trend. Meaning, you can't draw a fib damn near on, like, when you, okay, look, I'll just show you. He said, what you mean? Look, I'm gonna show you. I'm showing you. I got you. Look, out of all niggas, Tyrell, you talking about what you mean? You is the most knowledgeable nigga I know. You know everything. Look, on the range, not the trend. Meaning, if price is like this, look, if price is like this, all right, and we're here in price, niggas will sit here and draw the fib on the goddamn trend. And I'm like, no, that's the fucking leg. I said the range. Meaning, in order for you to have a range, you need to have a father and you need to have a mother. And then you need to unite them and grab your range. And now you're taking trades like this. You're taking trades off of your 618s for sales, and your 236 for buys, and your 382 for either buys or sales. So like that. That's what I mean. Now you're looking for sales at your 786, then sales at your 618, then buys at your 382, then buys again at your 236. That's what price is now. Yeah. Whenever I say a range, you need to have a high and you need to have a low. That's how price works. So now let me show you. Market cycles. Let me show you. You're talking about what the shit regular. You look for inducements. So when I say inducement, look for something like this. Or you could say, wait a minute. I don't know if Ramel has explained it to y'all. This is a order block on a higher time frame. Boom. This is an overall order block. What aligns with the 50% of that order block? The 618. So where is your limit? 618. You allow price to go bullish. You get tapped into your trade. Yo, stop losses wherever your stop loss is. Your TP is the 382. Why is my take profit at 382? Because this is the main region where price reversed. Like, nigga, like this was the level that caused price. I mean, not reverse. This was the main breakout. This was the last high that price had to break before continuing. So you have your trade. Boom. Target the 382, and you want to take buys off the 382, but wait, don't take buys off the 382 yet. Why? Because the market cycle never retested the 236. So instead, you have a limit at your 236. Why? Because I just taught y'all to understand that the market cycle has to play itself through, meaning that sell has to continue down. So now you know where to take that trade. So you allow this trade to fake everybody out, all down to the 236. Where's your stop loss? Under the swing low, right here. Where's your TP? Damn near somewhere up here. But what do? You allow that trade to play out. Boom. Now what happens? Now you know you bought. So where do you know to sell from? Price already sold from the 618. So you know the market cycle has to come up to the 786. So where do you sell from? The 786. It's stupid. But wait a minute. Within that 786, there's got to be an inducement. Wait, there's liquidity. We have highs here that's never been broken. Highs here that never been broken. So I know on like the 5-minute time frame or 3-minute time frame, this is just a liquidity sweep into, oh shit, a 3-minute order block. Oh, boom. Then you got a confluence. Order block at your 786. And then you sell from your 786. What do you target? Your 382. Why do you target your... Oh, damn. I took myself out the trade. Why do you target your 382? Because the 382 is your fucking pivot zone. So where's your TP? TP. Oh, shit. But you missed the trade. Goddamn. You know that you can sell from your 618. Oh, wait. You missed it again. So you sell from your 618 again. Then you hit TP. And then you sell from the 618 again. Because why? You're in the auction zone. There is no market cycle in the goddamn auction zone. But when price is flowing through, you have to understand the market cycle. But when you're in the auction zone, you can continue to take that trade over and over and over and over. So you allowed that trade to play through off the 618 again. Where's your target? The 382 TP. And now your target again is now the 236 for buys. That's where we're action now. So that's that. And then I have another example. God damn, I told you I'm too fucking light skinned. Fuck all of that. I gotta make my chart black again. Shit. See, I can't ever do this again with y'all. Mind me. For real. Y'all be doing way too damn much in the chat. Nigga gotta change his chart. Make it white. God damn it. All right, Pete. So listen. Another example. This is based on. So now let me cook for real. Let me show y'all on a real life chart. We was just on a real life chart, but let me show y'all real life trades that we took. Let me show y'all market cycles. So top to bottom. Out your range. You have a high, you have a low. Boom. You now allow price to break out of your 236. Price breaks out, okay. You have an order block on your 236. Oh shit. It's a reason to buy my 236. Take profit. That's trade number one. Number two, you're going to sell from your 618. Why? Because you have inducement. Why are you not going to sell from your 382? There's no inducement. Why are you not going to sell from the 50%? There's no inducement. You have more inducement at your 618 than any other given level on this chart. So you have inducement like this. I literally just eyeball all my shit. Vaughn, everybody would tell you. I don't care about because my fibs are already precise for me. I don't have to get out my exact levels. So now I sell from my 618. Now we hit TP. After the sell from the 618, after the sell from the 618, I already saw that price retested the 236, right? Price already retested the 236. And since price already retested the 236, I now know that I can buy off my 50%. That's another trade. 50% buys right here. Where's my TP? My 618. And when price gets to my 618, what do? Oh, I sell for my 618. Why? Because that's an inducement level for sales. So you allow you sell from your 618. Target what? Either your 382 or your 236. Price comes to your 236, you still hit TP. You take the trade again. Why? Do you buy from your 236 again? Because price never came up to your 786. Price never finished the fucking cycle. Y'all hear me? You take the 236 buy again in the discount 2 times because price never finished its overall cycle. What's the whole cycle? For price to go from discount to premium and then premium to discount, and price failed to do so. So I buy my discount again and take it to my goddamn premium. And then what happens? We get to our premium and then we sell. Damn, but you hit stop loss. Oh well. Stop loss hit. You took another sell. Stop loss hit. Damn. Consolidation. On to the next. Take a sell again. TP. Wait a minute. Off of that take profit, you like, wait, I could buy my 50%. Why? Because I got an order block. Wait. Order block is the last order block that was responsible for this bearish trend. Oh shit, holy grail. Huh. Price never broke out of price never closed below that range. Yes, it came all the way down to the 382. Let's say you didn't care about holy grail. You wanted to buy this off your 382. Why? Because your 382 is your pivot zone. You took a 382 buy right here off the bottom of your auction. TP. Then Vaughn just stated, you could have sold if you hit stop loss right here. This would have been your trade. You would have hit stop loss right here, and then you would have put another limit at your premium at your 50%. This is why I don't care. This is why I trade live. This is why I trade live. I don't do any I do one-on-ones. That's secondary. I trade live first. I just show y'all everything. I just show y'all everything. I can teach y'all, and I'm teaching y'all. I'm showing y'all how to do it. But I prefer just actually showing you and just trading, because when I'm showing you, you actually see it live. It hits way more. Experience is the best teacher. So I'm gonna allow you. I'm going to allow you to experience through my failure or my success. So then you see like, oh snap, he's hitting, and he hitting, and he hitting. Now we only got to take it there. Y'all already know like how we be hitting and how Vaughn be. I'm not Vaughn. How Vaughn be hitting, how Devin be hitting, how Vince be hitting. Like, stupid. Anyway, um, yeah. So now then prices consolidates. Honestly, ain't nothing I can really explain really about this. Price consolidates, but even with inside this consolidation, you would have hit every trade. Buys, boom. Sells, boom. Sells, boom. Buys, boom. Sells, boom. Yeah. It's just consolidation. Nothing you can really do about that. You know? And then what does price do from there? Price goes ahead, you have order blocks. You have levels to trade from. Now look what happens. You take a trade off your 50% or you don't. Let's say you missed the trade off your 50%. Damn, you missed it. You can sell off your 786 again. Oh, selling off my 786 again. Price comes up to 786, I sold it again. Oh shit, I missed the same trade off my 786. Damn. You take the break and retest of your 618. You know the you understand the fucking market direction. You understand that price tapped into a premium, meaning it's time to sell, meaning you can fucking sell. Oh, the market is showing you I'm allowing you to sell. But when you don't have that perspective, you can't do that. So 618 sells. Damn, you missed that sale. But then you buy your fucking 236. Boom. Why do you buy your 236? Because you know that's your discount. AP. But oh, wait a minute. You also missed that trade. You missed that trade too. So you sell your 618 again. Trade two. So you sell your 618 again. Hell yeah. Yeah. Would. Yeah, I do it every day. Every day in call, bro. Do that shit every day. Like, yeah, y'all gonna see my emotions though. Like, you can ask the people that's in the server. Like, bro, they see me go through my emotions, but I handle them pretty well. Like, yeah, I go through them, but I handle them. Why? Because it's easy for me to handle it because my levels are predetermined. So it's like if I take a loss, if I take a buy off my 382 and lose it, I'm gonna just buy my 236 then hit TP. I missed that trade and I see it's going bullish, I'm gonna let that market cycle play out, then just take it off my 618. If I miss my 618, then I'm like, damn. If I get a retest on my 618 and there's an order block there, I'm gonna take it again. So you take it again. Oh damn, but you lost it. So now you 2-2 for the day. So you like, damn, price is going bullish. So you just take another trade off your 786 because you have more inducement off that level until price breaks out the range. I don't like trends. People like trends. I don't like trends because you can't decide when it's way harder to predict the reversal, but it's way hard to predict internal reaction. I mean, it's way easier to predict internal reaction. When you predict internal reaction, they turn into big reversals when you throw big contracts. You don't need to catch a reversal. Everybody will tell you how many trades I caught and then I close early. And it just run. It just run for day. It just run for like 15 minutes straight. And I'm just like, damn. But it's because I don't care. I already had my 3, 4, 5, 6, 7 micros on there or whatnot, and I made my 1200. So I'm like, all right. And then after that trade completes and it breaks out of the range, I wait for another range to get created and draw out another fib. So how do you overcome that? You got some. How do I overcome what? Like what part? I need some water. If it says I need a meal. Give me some damn agua. How do I overcome what? Further targets? What you mean? Do you have a way to know that you can hold a trade past a few levels? No, I take my trade from inducement to inducement because I can only guarantee your reaction off of those levels. Can't guarantee nothing else. Trade market is about probability. So I'm going to put the probability in my favor, meaning I'm going to target the next reaction that can possibly cause this trade to go the opposite direction. Why would I target anything opposite? Which is why I use a decent amount of contracts and I trade on the 1 minute to 5 minute. Because I get that reaction real quick. I just take a sell on my 618 and take it to my 236. Why? Because I know that's my next inducement. I know what trade to take it to. That's how I know my targets. You said better to have a high probability TP than a low one. Exactly. And it's always better to get into a trade early than late. Because if you get into a trade late, you miss the party and you lost. You get into a trade early, you lost, and you can get back in and still have fun. Which is why I always take levels at my trade. I always take trades at my levels. I don't like to wait for confirmation. Because if I wait for confirmation, that bitch leaves, then I'm done for. And I lost the trade if I got in too late. My stop loss is now less. Or I have to raise my stop loss, which induces my psychology to go on a tilt. So I get in now. And I allow the forefront of my mind to I just deal with anxiety. That's all I deal with. When you face anxiety, it's like when you face anxiety, all the other psychological battles leave. Greed, all of that. Because what was the cause of that anxiety? For you to get in early. When you get in early, you can be early. And if you lose, you can still enjoy the party. But if you get in late, it's over. That's why I get into my trades exactly where I get into them at. Because I know people probably had those questions too. People always ask me those, like, yo, do you actually get in your trades right there? Like, how do you know when to get in? I just put a limit exactly at that level. But how do you know price is going to react there? Because we have an inducement, and I understand that this is my premium, and that anything within inside this given range is going to be respected based on the given cycle because price never retested it yet. There's so many things into one. I'm finna make so many, like, bro. I'm telling you. I already knew these things, but I was just like, yo, how do I articulate this? Like, because I know Ramel just got back. He was out. He just got back. And the whole time he was gone, I'm like, yo, Wednesday got to be a big day. How am I going to articulate this? Because it's something that I understand just based off of experience and then having help with the charts, just from my perspective. Everyone has their own perspective. It's not really like people are smarter or people know more. They just know they either been in the game, they just have more experience. So I'm just saying like, yo, I took my experiences, not saying I know more. I just took my perspective and said, okay, how can I make this mechanical? That's literally how I am. I'm so like straightforward to the point where it kind of hinders me. So I try to find a way to make everything else straightforward. So I realized, I'm like, wait a minute. If every trade that we're taking is based on probability, why am I going to try to find a fair value gap that's never been tapped? Never tapped this fair value gap. The probability of price reacting is way lower than taking my trade off of an inducement that has been tapped. The market plays based off of history, based off of patterns, not patterns that haven't been done before. Look at the fucking chart. It's time-based. But we're taking trades based on levels that's never been tapped. We see a fair value gap and price comes up to it and we just take a sell. Nigga, no. No. You need to take trades based on levels that react. Take trades based on levels that have been retested. Because then you know that price is either going to go bounce off of it or bounce off of it to the downside or the upside. It's about probability. You want to put the probability in your favor. That's the only important thing. And when you do that, that's when you understand like, damn, this market cycle shit is easier than I thought. Because then you know exactly where to take your trades. And then price came all the way back up to the top of that range and fell. Crazy. But let's get back into the file. Why is my laptop acting retarded? Okay. If y'all can see. All right, bet. So, next, it says, execution logic, retrace. No, sorry, execution logic, break, retrace, and continue. Break, retrace, and continue. The reason I say that 3 times is because that is the core concept of ICC. We have a lot of ICC traders. I'm about to help y'all now. I got all my Fibonacci niggas about the way. Now let me help ICC. Let me help y'all understand this. I'm gonna say it again. Break, retrace, and continue. There's a 3-step process to a trend. Meaning there are 3 levels to a trend. When you understand that, you can incorporate cycles. When you incorporate cycles, you can understand order flow. Because you will then know that when price breaks, that's level 1. When price retraces, that's level 2. And you're supposed to catch the trade on level 2. Why? Because that's when it's early. Why? Because like I just said, you want to get into a trade early before it's too late. You can always hop back in the trade. So now you take the trade on the retracement and then you continue. You don't take the trade after it continues, because after it continues, you're not in a discount anymore. I'm going to say that last part one last time. That's nothing against Psy at all. But the reason why Romel was able to find a way and incorporate all of these different things into ICC and make it way more understandable is that he knew that price had, wait a minute. He was like, yo, wait, indication, correction, continuation. The continuation is back above this level, meaning we're not in a discount anymore. You're supposed to, the core concept of all of this is to buy low and sell high, meaning if I can anticipate that continuation before it continues, the probability of my trade hitting TP is way higher than getting in at the continuation, meaning later. So there's a 3-step process. Break, retrace, continue. On the retracement, you find your entry, which is the order block, or the goddamn Fibonacci level, or the liquidity, anything, any type of inducement. All right, so it says pre-market design does not predict, it responds. The execution sequence is mechanical and repeatable across all time frames and instruments. I genuinely trade Solana. Everybody knows I trade Solana, NASDAQ, and gold. I got people, I think AJ trades this year on Forex. He be smacking. AJ, if you in here, let him know. If you, I think that's you. You be smacking with the fibs on futures. I mean, not futures, on what you call it. Just Rich too. I didn't even know he be using the fibs. You use the fibs? Oh snap! If you do, that's fire. You put them on? Damn, that's hard, bro. I ain't gonna lie, that's crazy. This shit works for crypto. Solana is my wife. I already told my girlfriend that. She know that already. I told her, Solana's my everything. She gives me everything I need. Every TP. I don't gotta do no bullshit. She don't give me no drawdown, no talk back. Nigga, she know the program to the T. She know as soon as she tap that 786, it's time to go down. Down. When it tap that 236, it's time to go up. Boy, listen. Solana be hitting though, but and then gold obviously is gold. It's my everyday, my go-to. You know what I mean? The reason I trade these 3 different things is because Solana isn't as, volatile as all the mainstream. And then gold, I can trade that around the clock, and NQ I trade during New York session. All right, so anyway, it says break. This is step 1. Price breaks a range boundary. Listen to my wording. I'm not saying price gives an indication. I said it breaks a range boundary. Because it's just perspective. We all trade the same shit. I'm just trying to shift the perspective for more people so that maybe ICC gets understood to a wider perspective. Romel just went on a whole rant about ICC. So y'all should for sure get it. So price breaks a range boundary, establishing directional intent through auction acceptance beyond previous extremes. Say it again. Price breaks a range boundary, establishing directional intent through auction acceptance beyond previous extremes. Meaning, all the previous extremes have now been broken, indicating bullish direction or bearish direction. When you look at the market, and we sitting here and we trading, right? we trading, one core thing that we got to remember, and that's, give an analogy. You drive into Walmart. You drive, you know what I'm saying? Boom, you make a left, right, you know what I'm saying? How to make a U-turn, goddamn it. Boom. Now you just broke this high. But wait a minute, you forgot you need gas and you got like 8 more miles to go. And you not there and you like, damn, I need gas. But you realize that you're actually somewhat low-key like, hold on. You're some low-key like close, you're closer to here. So in order for price to continue higher, it has to go and continue and get gas. That's what I'm saying. Price continues down. But wait a minute. Nobody teaches this but Romel. You know what he says? Order block. I'm catching this bitch on the correction. And he's in buys right here. And then it goes. Or you wait for the second raid, then it goes. That's Romel. Price has to make a U-turn. But then, surprising thing about all of this is you'll throw a fib on here like this. I'm finna throw a random fib on here and watch this shit line up. Let me stop playing. That's crazy. And that shit line up with your 237, your 618. And now you know exactly where to take that trade. Why? Because you have an inducement. Bow. You know exactly where to take it. 618 buys. You went into a little bit of drawdown and then you smack TP. That's how we trade, okay? That's how we trade. That's how we trade. And hopefully y'all are understanding. Said, dang, that's textbook T2. Bro, type 2? Bro, we trade the same thing, all of us. The fuck is type 2? Well, I don't even know, but all I know is them boys be cooking. Whatever it is they be doing, man. I ain't gonna lie. But that's how we trade, yo. So let me see if I can just show y'all that as a real example. I look as a real example. What y'all see right here? Y'all see a goddamn bearish range. You see a goddamn indication. From this indication, you see a fucking order block. What aligns with your order block? Yo, 236 buys. Buys all day. Why are you not going to sell? Why are you not going to buy your 382? Well, I did buy my 382, but I knew to not target my 618 because I know we have to come and retrace to our main 236. How do you know that, Zeke? Because we have the original order block at our 236, which is what I just explained to y'all visually before I even looked at the chart. Price breaks out, you draw your fib, boom, boom, you got your indication, the correction. Now we catching trades before the trade even fucking goes. Why? Because you understand the goddamn direction model. My bad. I'm getting passionate because you understand the direction model now. If you don't understand the directional model, my nigga, you're not gonna know, you ain't gonna have no confidence in the trade. Now you got confidence in the trade because you understand that this is your fucking discount. So now you hitting trades back to back. Sells off the 618, buys off the 236, sells off the 786. Why? Because it's an order block, and this was the main high that indicated all of our sales. This was the correctional high before the continuation of this bearish inducement. Correction, continuation. So price is going to come right back up, tap my 786, and dump. Oh, wait, I missed that shit. Nigga didn't take your 618 retest. Where's your stop loss go? Shit, my stop loss goes above the previous level that it rejected from because I know previously it stopped right here. So I'm going to put my stop loss there too. TP. Damn, you missed it. You buy your 382. TP. You in the auction zone. You snapping. You sell your 618. TP. Your 236, your 382 again. Then you hit stop loss. That's how we trade. That's how and I don't even care for people to use the fibs or not. Like, I don't trade live to show y'all my shit work. Trust me, I know it works. I show y'all to take my damn trades. The whole point, now let's get into priority. The whole point of priority, nigga, is so that y'all can come up in there and learn and win money with me. I actually trade better when I trade live because I know not to make an embarrassment of myself. I need to be a representation. So I actually subconsciously trade better. Everyone will tell you that. They know that. But when I trade by myself, I do not trade well. Well, I'm lying. Shit, I was snapping last night. I ain't gonna lie. I was snapping, but in there, I was talking on the phone with my lady, and I hit like 5 trades last night. I showed them. I sent the screenshots to Devin and Vaughn. So I'll be having my moments, but I trade better when I am live because I know I have to show these people the right way to trade. Because in reality, I don't want people texting me, get your money and get on. Like today, we was in live in my server, and we went ahead and said, "Yo, we was hitting," and one of the ladies in there, her name is Q. She lost one trade for 500, won the second trade, made 1,200. She said, "All right, I'm tired. I'm gonna catch y'all tomorrow." Bye. Perfect. That's what a service should be like. To like, nigga, that's how we doing it. And then when you come back, everyone's back in the call, and everyone's now learning. Boom, 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 left and right. And then Romel's gonna sit there and go crazy. Mel's gonna sit there and show y'all everything, Holy Grail, wig sauce, and really go in with the details and the why behind price action. Then Tyrell is gonna give you the actual true understanding, and that nigga is deadly. He will. Oh my gosh, I don't even get into Tyrell. That nigga gonna have you. Bruh. Listen, you ask Tyrell a question, he gonna be like, "Well, maybe. Well, I don't know. Well, we'll just have to see." I'm like, just give me the fucking ass, like, oh, boy. But Tyrell will get you right is because Tyrell knows who needs it and who doesn't. So he's very selective, and that's fine. And then you got me, nigga. I'm gonna just do this shit, and I'm gonna just do it, and I'm gonna just show y'all. I'm gonna just do it, and y'all just take my trades, and you make money, and then you learn, and then you eventually know how to do it yourself, and then eventually you teach, or eventually you just do your own thing. You know, that's it. That's it. That's all we want to do. That's all we care about. So it's like I try to like after this video today. Like I've been uploading a lot of videos on YouTube. I've been overly consistent for like a month. I've been dropping every 3 days, 2 days, or 4 days, every day. Every couple of days I'll drop. But now my recent video, it's been about 6 days. When I drop this video, every video after this will probably just be a live call, or it won't be nothing crazy at all. Because I already got the videos on YouTube, and I'm not finna burn myself out. And we finna just sit here and make the money now. Because now y'all can learn. I've seen people sit here that I've never done a one-on-one with go learn the fibs and come back and show me that they've got funded. Yeah, bro, I gotta get to that side. I gotta show you that. But get to that level. Get funded on the account. Get payouts on the account. I don't even gotta show my testimonials. They there. Y'all can go look at the testimonials and see like, yo, okay, nigga, we actually hitting, and it's like, damn, everything is being done based on mechanics. And the people that I teach, they're learning how to not give a damn about the trade because they know they'll catch the next. Meaning, just like this. Because let's be realistic. Let's say you're an average trader and you don't understand the market cycle. And let's say you went ahead and took a trade just like this. Let me be realistic. You took a trade right here and lost it. Why? Because you don't understand this market cycle needs to come up to the 786. You lost. So you're like, shit. But wait, Zeke taught me to not care. Why? Because you sell right from the 786. Boom, TP, right? Now you hit TP off your 786. Let me change the color of this, bro. This shit's annoying. Boom. Now you hit TP straight off your 786. Cool. Price falls. You wait for the retest of your 618, but you miss it. Damn. You get price comes up. You thought it went bullish. You took a buy. You lost that trade too. Why are you taking a buy? Whatever. You lost that one. But then you take a buy at your 382 TP. Then you take a sell at your 618 TP. All of these trades, you only lost 1, 2, 3 trades, and you won 1, 2, 3 trades. But you see how mechanical that is. That is just sitting there throwing. That's just me throwing trades on. That's not even me being logical, yo. That's not me incorporating the ranges, understanding that, oh shit, price just had another internal reversal here. So now look at this head and shoulders. Oh goddamn. What if I click alt and invert price? Look, whatever's a, I'll go ahead and alt price. That's price. It just reversed. Came down to a level of support. The whole time it's not support. It's resistance. It does the same shit. It does the same shit. All like over and over and over. And that's my job to show y'all that. I told y'all I was gonna come in here and like really give y'all some game. Like y'all thought I was lying. I was just so dead ass. He said we gotta create some kind of unified trading model, simple, refined, clean. This way, no measure that knows, that knows. He said just strat. Yeah, that should be crazy. That'll be overly different. Bro, I want everyone to trade the Fib. Everyone should incorporate it at least. You don't even gotta fucking trade them or have them on your chart all the time. But nigga, why would you? Why would you not trade that? Man, oh well, whatever. Anyway, let's continue. Um, look, let's get back into it. Let's listen. Come on. Instead of typing in the chat, I'm just getting back into it. I'm not doing this shit again. I swear to you. So look, the role of auction bias. Listen, this is where the cycles comes into play. Cycles. It says, no, I mean not cycles, but it's more so just the what's needed to continue, like the steps to drawing out your fib. So number one, identify the direction, and then Fibonacci second. Identify your direction, then understand the fib. Because if you don't prioritize your direction, then the range of your fib will be incorrect. On the mother and father, exactly. It says before drawing a single price action level, the trader must identify auction bias. What is auction bias? That's by understanding who the hell is the top and who the hell is the bottom of price action. All right. It says, is the market in a bullish auction, meaning a bullish range, or a bearish auction, a bearish range? Which side controls the range? Auction bias comes from breaks of structure, higher highs and lower lows, higher lows and lower highs. Liquidity sweeps, failed auctions. What are failed auctions? Pretty much any time price fails to continue when it should have. And then premium discount positioning relative to the macro range. It says once bias is established, Fibonacci becomes the tool of execution. Timing. Without bias, Fibonacci is meaningless. And when I say bias, that means drawing out your fib, essentially. That's it. Okay. All right, now inducements. I'm about to wrap this up soon, actually, because yeah. Oh, there's not even really too much to go over, bro. Straight up. So it says inducement as entry confluence. Yeah, market is open. Market is open. Market is open. Market is open. It says inducement as entry confluence. Inducement represents trap participation. Okay, always. I'm gonna say it again. Inducement represents trap participation. Areas where retail or weak institutional players are lured into poor positions before a reversal. It says inducement is not required for every trade, but when present, it dramatically increases execution confidence. Inducement is not required for every trade, but when present, it dramatically increases execution confidence. What are inducements? So whenever y'all hear me teach, or whenever y'all see me in my videos, and I don't say fair value gap, and I don't say imbalance, and I don't say order blocks, and I don't say this, and I don't say that, and instead I just say inducement, it's because that's the nature of what the fuck it is. All that shit is, all y'all saying the same thing. Nigga, it's an inducement on my 786. Why I gotta be specific and say it's an inverted fair value gap on my 786, and then above that we have an order block that never been tapped. Instead, I'm gonna just be like, yo, we have an inducement above us, and we have an inducement on our 786. They're gonna be like, all right, bet. And then when they see it, they'll know exactly what it is. Inducement. What is an inducement? Liquidity, fair value gaps, order blocks, and balances in internal ranges. What is liquidity? Concentrate. So also listen to this, because some of y'all really don't know what these definitions are, what they are. Wait, hold on, let me see. Alexia, she said, boom. Damn. Yeah. Shit crazy. What is liquidity? She said, well, I said she, because I was just reading what she was saying. Liquidity pools. It says concentrations of stop losses above highs or below lows. Price often runs these pools before reversing. Stop losses above highs or below lows. Price often runs these pools before reversing. Fair value gaps. They're imbalances left behind during rapid price movement. Market often refills these gaps before continuation. Order blocks. The last consolidation before a significant move. It represents institutional activity and often acts as a support or resistance. Imbalances. Zones where one side overwhelmed the other, leaving price inefficiency. Price seeks to rebalance these areas, obviously. Internal ranges, consolidations within larger ranges that act as pivot points for entry and exits. This is the order flow part. I don't even got to go over this, but this is pretty much what I was saying earlier when I was explaining that when you understand the cycles of the market and knowing that when you have a discount, it has to go to the, that reversal has to initiate. Like I said earlier, price has to sweep liquidity for all the traders that got into bad trades. Then price also has to hit TP for all the traders that got into good trades. If you are not you're in between, meaning you're looking for a trade. So when you see a decent move or a decent reaction happening, let that trade react. You can't just take another one because that trade has to follow through. It has to reward those good trades. I'm pretty sure no one's told y'all that before. Like, you have to do that. You have to let those trades execute. So it says, traditional order flow analysis requires delta tracking, volume profiling, and real-time bid and ask observation. Pre-market design replaces this complexity with structural order flow. Auction logic captures institutional behavior without needing to see every transaction. Market cycles naturally appear at Fibonacci levels because that's where institutional participants are positioned. That was hella peas. Damn. Where institutional participants are positioned. That's crazy. It says the trader reacts to structure, not noise. Why do you think I only take trades at my levels? I never get caught up. But I'm telling you, I never, like, unless I'm trading outside of the session or some shit, like it's at a random time. But when I take a trade, it's either going to literally find its way to hit TP or find its way to hit stop loss, obviously. But it's always clear. It's always like, okay, either we'll hit stop loss or hit TP. Because I take my trades at strong given levels. There's nothing in between. It says the trader reacts to structure, not noise. By the time order flow is visible in traditional tools, the opportunity is often gone. PMD anticipates order flow by understanding where it must occur based on ranges. It says this approach eliminates the need for expensive data feeds, complex software, or real-time tape reading. The chart itself reveals everything required for execution. Oh yeah, she went crazy. Yo, she went wild. The only reason I'm low-key not saying nothing about it because I don't know if she want everybody in her business. That's why I'm just ignoring the chat. But yeah, she did real good the other day. When the niggas in here. So, yeah. Oh yeah, it is in my testimony. You right. I'm tweaking. My dumb ass. It is in my testimony. I made sure I put it in there. I see. I'll be on point. I ain't even realize I did that. I forgot. I just be on point. I be self-aware of other people. I'm like, okay, trying to make sure. Anyway, it says these are the common areas in PMD application. It says drawing fibs from legs instead of ranges. Like I said, I already explained that. You do not want to draw a fib on a goddamn trend. And then Tyrell asks how or why, what do I mean by that? And I showed it. I showed a trend and then I showed a range. A range has a father and a mother, a high and a low. A trend just has a high and just has a low and then it's creating a high. Or has a high and it's just creating a low, meaning price is still trending. But there has to be a beginning and an end to a range. It's one mistake. The second mistake is trading against auction bias, meaning they don't understand that they don't understand premium and discount. They don't understand that they could be taking a buy, but price is already in the premium. Or they could be taking a sell, but price is already in the discount. Well, wait, no, that's for buying premium and selling discount. It says taking bearish setups and bullish. Yes, it means the same exact thing. Exactly. And then you have forcing inducement. This is what most of y'all do, yo. This is what most of y'all do with technical analysis. A lot of y'all really don't understand what they're saying, and y'all need to listen because I'm not saying y'all didn't today, but I gotta listen because it's like, yo, they're trying to explain to y'all the technicals because with the technicals, it's called technical for a reason. When y'all hear the word technical, you hear, me personally, when I hear the word technical, I hear manual, meaning it needs to be manually done because it's technical. Meaning, when you're taking these trades, yo, you have to find a way to not force inducement because you know so much and you're not trying to force too many levels. So you want to make sure that you are drawing out the right levels when in reality that these levels are actually predestined and that all the levels you're drawing out were already on the fib and you use that as a confluence and now you're not forcing inducement anymore. And then you have overcomplicating execution. We don't even got to get into that. It's very simple. A lot of us, we take the trade and then we just don't take the trade sometimes because we too much in our head. Okay. All right. And then do I gotta get into this? Identify range, define macro range of boundaries. Yeah. Okay. Yeah. The mechanical execution framework. All right. Step 1, identify the range. Step 2, determine auction bias. Step 3, draw the fib correctly. Step 4, wait for the breakout and the retracement. Meaning, let that price fucking do what it got to do so that you can take your first trade. Let that cycle play out. Check for inducements. That's optional. You really don't have to. You can low-key just take that shit based on the cycle and you'll already know. But look for inducements, then execute mechanically. Understand I said mechanically. Didn't say automatically. I didn't say manually. I said mechanically. You want to enter because the reason why I feel as though my definition of mechanical means statistically proven price should do this. But I manually take it based on how I feel. That's mechanical. It is historically and technically proven and statistically proven for price to sell off this order block off the 786. So technically that is technically true. But I'm manually taking this trade off of how I feel, which makes it mechanical. Mind you, mechanical is in between technical and manual. That's how I try to teach people how to trade. Today's about the fibs. I'll probably make another really good video or another session like this, another Wick Sauce Wednesday about intrahuman design, understanding your trader DNA, because a lot of y'all don't understand how you're supposed to trade and you don't evaluate yourself. And you just go off of what the first person tells you. I got to get into that too. I'm sorry. I got to get into that too. Look. What Romel is telling you is everything you need to be profitable. What Tyrell is telling you is everything you need to be profitable. What I'm telling you is everything you need to be profitable. But guess what? We're giving you information for the general population. We're giving you information that works for everything and everyone. But understand that you may not work for everything and everyone. So you have to evaluate yourself and maybe eat the meat and spit out the bones. You need to. You have to eat the meat and spit out the bones. I'm not finna sit here and just tell y'all, nigga, that's not pause. Eat the meat and spit out the bones, bro. Everybody say that. That's not pause. Come on, bro. Ain't no way that's pause. Everybody know that saying. I would get it if nobody knew that saying. That's OD. Hell no. I knew somebody was gonna say it, bro. I was like, so yeah, eat the meat and spit out the bones. So everything that I'm telling you, take what you know works for you. And take what you know take what you know works for you. Because you don't have to all the nigga Nev, you just called it nigga cute, you got okay. I don't know. But damn, I forgot my train of thought, bro. That nigga's tweaking in the chat. Oh, what was I saying, bro? Oh my goodness, what was I saying, man? Damn. Yeah, bro. Eat the meat, spit out the bones. The things that I'm telling you, you need to take and then you need to go experience them for yourself. Because everything that I'm telling you is going to work for you, but experience is the best teacher. The market will teach you more than I ever could. The market's going to teach you more than Ramel ever could. Don't listen. Don't just take don't just take, like with this session, don't take everything I told you to just go fucking apply it. Don't just take everything Ramel telling you and just go fucking apply it because it may not work for you. Take what you know works, then let experience shape you. Experience is going to shape you. Why? Because you are you. We all trade different for a reason. Why do you think nobody trades the same? We all got the same issues. Why? Because we all need to understand to just be trade like you. It's okay to trade like you. There's reasons why you have psychological battles, and low key, you don't have to face all. There's this facade. There's this punk ass facade in the trading industry. Honestly, I don't care what nobody say. You have to break all of these psychological battles to be profitable. No, you don't. Like, if you got a problem with over anticipating a trade, nigga, then swing trade. Problem solved. Now you're patient. Or no, I'm sorry, not swing trade. Go scalp. Because if you know that you over anticipate on the 15-minute or the hour, then go scalp. Put yourself in a situation where you cannot express what you call something that's hindering you. Or if you have an issue with being fearful of your trades, then put yourself in an environment where you're not fearful anymore, and now you can trade out of your natural state. I'm gonna go over that in another Wix Sauce Wednesday. It's crazy. Interhuman design, that shit is so wild. You said, I want to know what level is it. Like, she'll sit there and stop God. Now, why? Yeah, she be snapping. All right. And then pretty much the last part of this, because it's almost 3:30. The last part of this says pre-market design, a complete doctrine. It says pre-market design is not a strategy. Right? It's a framework for understanding market structure through the lens of auction mechanics, meaning ranges, and Fibonacci range analysis. It replaces prediction with response. It eliminates the need for complex indicators and order flow software or discretionary interpretation. You can take trades off of predetermined levels that are based on history. Take trades at levels that are shown that reject. There's no need to force. Take trades with inducements. It says the rules are clear, repeatable, and mechanically applicable across all markets and time frames. Markets operate in auctions. Auctions create ranges. Ranges produce Fibonacci zones, and these zones provide execution opportunities. This cycle repeats indefinitely because auction mechanics do not change. It don't change. All right, like it doesn't change at all, bro. Like you'll be able to throw these fibs on your chart all the time, no matter what range. On Evan events, they be on the 15-second. I said 15-second. I be on the 1 in 5 minute, but then you got people that's taking these trades on the hour. This shit is not based on the seconds. I mean the time frame. It's based on ranges, which gives you ultimate flexibility. Look, I'm finna explain it right now, and then I'm finna wrap this up because I gotta go. You got a high, you have a low, right? Where are you taking your trades at? You're taking buys at 236, sells at 618, sells at 786, and buys at 382. You're flipping these. You already explained it. Y'all understand that. Now, what if I did this? I drew a fib from this range. So now, this perfect buy, TP, 236. This perfect buy, 382, TP. This perfect sell, lost it, but then took it off to 50%, TP. And then I got kind of fucked up right here. And then 618 sell, TP. I said F that range as well. I didn't want to draw that range. So I said, bet, I'm going to draw a bullish range. Where's a bullish range, Zeke? Like this. Nothing changes. Nothing changes. Now, since it's a bullish range, we wouldn't have started taking no trades till up here. Because this fib wouldn't have been created till up here. Meaning 236 sells, TP. 236 sells again, TP. You're also taking breakouts, yo. So when I say TP, I mean like double TP. You're gonna hit. You have to, like, you're gonna hit. And if you don't, you'll hit again. And if you don't, you'll hit again. And if you don't, you'll hit again and again and again. The whole chat saw me go 11 for 11 straight live the entire time. I'm not talking in one day. I'm talking over the course of 2 weeks. Like, yeah, somebody can go 11 for 11 in a day, but consistent like that, I 11 for 11 in 2 weeks. And then, like, now I kind of fucked up. And I'm like 21 and like, I'm like 21 and like 12. 21 and 12. So it's like, damn. But, yeah, man, like, I ain't really got nothing else to say. That's the fibs for you, yo. That's the fibs for you. Like, Alexia, she watched all the videos on YouTube. I never get that girl on one-on-one. Ever. I've never gave her a one-on-one ever. I saw like I saw her up in the chat. She just started dropping trades. I was like, cool, that's what's up. Whatever. I didn't care for it really. I was like, okay, cool. But then she started dropping more and more and more and more and more, and I was like, whoa. I was like, whoa. I was like, whoa, yeah, she clearly don't need me at all. So I low key felt the way, and I had to turn up at like during the nighttime personally. With Devin and Vaughn, I ain't gonna lie. I told them in the chat this morning where I was hurt. I was hurt. Look at her right now. She be hitting, yo. But I'm telling y'all, like, I'm sitting here and I'm telling y'all, like, from a different perspective, like, regardless of what I was saying earlier, like, man, the information is there for free, yo. I don't need me. I don't need Romel. But I know I'm gonna be here. And Romel gonna be here too. I'm still posting, I'm still gonna post, I'm gonna still show up every day. Ain't nothing gonna change. But it's like, yo, y'all don't need me. Which is why I rather just trade live and just show y'all this shit. Because I tell people when I trade live, that is a one-on-one live. If it's just a one-on-one, like, yeah, you can ask personal questions, but I ain't gonna show you live because it's a one-on-one. Like, ooh. But if I'm live, bro, it's a one-on-one in the moment. Yeah, she gonna take that down trade, boy. She me on steroids times 10. I don't know what she. I thought I was good. I thought I would be hitting trades until. Yeah, she don't care. She has absolutely no fear, but yeah, it's cool. Be proud of her because now I know it's like, damn, that's exactly. It validates everything with me. I'm like, damn, okay, I guess you're doing this shit right. It's like that's about like the sixth, seventh person that don't even that I've never one-on-one and that turned up. You know what I mean? So yeah, we go over. Okay, let me make sure Ramel's still recording. Yo, Ramel, you in the chat, bro? You still recording? Please tell me you still recording all of this. I'm not gonna lie, I'm gonna be hurt. I'm gonna be so hurt. I don't know if he in the chat though. I'm gonna go get him. I've been recording. You been recording the whole time? The whole time. Oh my gosh, I'm not gonna lie, bro. Yeah, we mean you gotta get your ass a fucking payroll. Shit. That guy there, he is like, bro. Well, working. He working overtime doing nothing. You got it on record too? Okay, we solid there. She said I want to learn everything. Yeah, still recording. Okay, I'm just making sure. Bet. All right, bet. Yeah. Okay. I had to just make sure. But yeah, I'm trying to decide, man. I mean, that's pretty much it when it comes to the fibs, yo. Like he said he finna sell a course on the side. How to record and screenshot in 2.3 seconds. Most profitable way to be a cameraman online. Nigga, like, ain't no way. I've never seen nobody do that before. Screen record and screenshot and simultaneously. Bro, versatile. But let me pull up this file real quick. Let's pull up this file, and this file explains intrahuman design. I wasn't gonna go over intrahuman design, but I'm gonna get into it for a little bit, and then we can continue from there or whatnot. Cause I gotta go open it up. I forgot this man in the army. Capital preservation too. I'm gonna do that shit another time. I got this too many. Study material. Intrahuman design right here. All right, y'all. That's it with the chart. So if y'all came to the charts, that's the fib all the way down pat, yo. That's everything. PDF? Yeah, it's right here. I'm putting this PDF in here. I'm not keeping it in here. I'm about to put this in here for like 40 seconds. I already had an experience where this like 4 people would sit here and try to over here sell these. But like, no, bro. My girl already told me get right with that. Get right with the trademark and shit. Be playing games. But I got you. Hold on. Now, where's it at? All right, yeah, here. All right. and I'm finna take it off. And if y'all smart, y'all should still never need it. Just ask somebody and they'll give it to you. Use your brain. I know I'm gonna have people text me and be like, Z, can you send it to me, please? Bro, if you were smart, you would just ask somebody. Like you said, $100. Nah, you ain't gotta pay me for this shit, man. It's just a file. Got the watt for that. But look, 786, man. I'm anticipating for price to fall down to here and strictly go up. Straight up. Let me send y'all this too. I don't mind putting these in here. I don't mind keeping these in here. Actually, only this one right here. I'm gonna put this in the chat as well because this is a good. This is capital. This is the capital preservation. Copy. I'm gonna keep this in here because I'm gonna go over this anyway. Asian session today, in my yeah. I think this is the file right here. Yeah, y'all go ahead. Y'all can just keep that. That's capital preservation. All right. All right. Okay. I had to take a little break. All right, we back. Went on a rant. Now we cool. Interhuman design. Let's get into the psychology part of this. And I'm not gonna go through all of this. It's gonna be another time where I go through like all of this in depth. You know what I'm saying? I'm telling you, she said, yeah, I'm not trying to make no more videos after this for real. Like I'm gonna make videos, but shit, man, fuck it. If you hear, you hear, and it's never gonna be like this again. I'm never doing this again. I prioritize my sanity. Nigga, I trade live. That's it. Like Vaughn already knows, so I come in, trade live, bye-bye. Y'all see me again later. Like, we make the bread, we dip. We teach, dip. All right, so look. This is what it is. I need y'all to focus again. Let's wrap this up. And this is more psychology, more internal based. So y'all already understand. Where can I see you? Here in the Discord or YouTube? Yeah, YouTube. You find you just YouTube. Anyway, look, listen. Let's get into it. Just focus. It says, what is intrahuman design? Intrahuman design is the personalized decoding of a trader's behavior, psychology, and risk tendencies. This framework identifies your natural rhythm, emotional triggers, and capital preservation instincts, then transforms them into mechanical trading systems that fit your unique trader DNA. Yeah, we not gonna feed it to you. I'm telling you, I'm on Romel type time. Oh, I'm not sharing my screen. I'm on Romel type time, and like I'm telling you, like, bro, because I got less tolerance than Romel. Romel actually stronger than me when it comes to that. Like, I'm not doing it. My boy be working, and has worked for months and uploaded crazy. Not me. Shit. I'm so serious. You know what I'm saying? All right, so look, listen. I'm gonna say it again. Intrahuman design is the personalized decoding of a trader's behavior, psychology, and risk tendencies. This framework identifies your natural rhythm, emotional triggers, and capital preservation instincts, and transforms them into mechanical trading systems that fit your unique trader DNA. Unlike generic strategies or mental strategies that force you into someone else's mold, this approach recognizes that every trader has a distinct psychological architecture. Your wins and losses aren't random. They're reflections of your internal operating system. Why? Because you have control of your P&L, nobody else. You don't trade the markets, you trade yourself through the markets. Be aware of the person that's clicking the button, not just click the button. So let's get psychology. I want to talk the mind. We can get into the mind. I'm not going to go over these questions. Somebody take a screenshot real quick of this. Wait. This. I'm not going to go over this. These are questions to ask ourselves. Boom, I already know Gremlin had that shit before I even asked. He had that shit yesterday. I know it. Somebody had that shit yesterday of the screen. Somebody had that screenshot yesterday. All right, so look, this is something I already went over. You said, give me the link. This? Okay, yeah. I thought I dropped it in there. I had this link. This link tough. Look, it says, listen. So look, it says category and example issue. A lot of people throw y'all issues, you know what I'm saying? A lot of people throw y'all issues on just the category. And y'all say, oh, I take impulsive trades. Oh, I have fear of missing out. Oh, overconfidence. Oh, hesitation, revenge trading, analysis paralysis. But what's the real issue? I found a way to dissect the real issue and find a mechanical translation to that. Meaning, like I said, translation. Translation. I didn't say change. I never said that these things were bad. I said translate. Meaning you're changing the frequency of the language. You're using it to your benefit. So if you take impulsive entries, that's just over anticipation. Fear of missing out, that's chasing price. Overconfidence, oversized lots. Analysis paralysis, information overload. So when you go over these different things, when you go over these different things, man, that nigga fast. How he do that? I ain't gonna lie. Gremlin the type of nigga to take his job too serious. That nigga turning Hulk. I'ma do my job. That nigga to make sure he's locked in like all session. I gotta watch him trade now. I swear to God. He gonna beat the trade ass if it don't go his way. That boy different. I've never seen nothing like it. That's hilarious. Bro, different. He take his job too. Bro said, I'm gonna get this screenshot tomorrow. Nigga knew to get the screenshot yesterday. I ain't even have to ask him. Get the free PDF yesterday. I ain't even have to ask him. So look, analysis paralysis. That's information overload. Perfect. You got the file loaded up. Hey, wait a minute. Does that nigga have? Is that like 10 tabs of the same screen? Wait, hold on. I think I might be. Am I tweaking? Wait, somebody tell me I'm tweaking. The bro just sent a screenshot of like 10 tabs of the same shit. Oh, okay, wait. I'm recording, so I gotta do this for YouTube. I gotta focus. Okay, those are clips. Okay, bro, I ain't gonna lie. I was finna say he's different with dedication. Yeah, bro, I was finna be on it. Like I was finna say I ain't. That's a different level. Anyway, let's focus. Look, analysis paralysis. That's information overload. When you know too much, you get amped up. Okay, when you have revenge trading. When you revenge trade, that's really emotional recovery, not revenge trading. It's emotional recovery. Because why do you revenge trade? You revenge trade because you lack patience with your emotions. Don't recover. That's what it is. So what's the mechanical translation to that? You decide however many trades is your maximum. For overconfidence, I mean, for hesitation, the true issue of hesitation is truly lack of trust. Why do you lack trust? Because every time you tell yourself you're going to do something, you lie to your damn self. So how can you have conviction in your trades? How can you have conviction? I need y'all to listen. Y'all type in the chat, hello, bro. For real. I'm only going over. The only reason I'm being so serious on that, the only reason I'm being so serious about listening, because I'm usually not like this, is because I'm never doing this again. That's why. That's the only reason why. If it was just a regular day, bro, I ain't gonna lie. I wouldn't give a damn. I'm never doing this again. Oh, I ain't gonna lie, yeah, he hit that trade. I ain't gonna lie, that shit. Yeah, that Tyrell be hitting. Anyway, hesitation. Why do people hesitate? People hesitate because they have lack of trust. Why do they have lack of trust? Because every time they tell themselves they're gonna do something, they lie. So how can they have conviction? How can they be truthful in their entries? How can they have faith? How can they have hope? How can they have any of those things when they don't even tell the truth to themselves? You're like, understand the why. So when you become aware, that's all I need to do. I just made, for the people that didn't know that, some of y'all probably already knew, but for the people that didn't know that, now you know that the root of hesitation is lack of trust, and lack of trust is because you lied to yourself. I did my job when it came to that. So now you have to implement it. That is me cooking the food, and now you have to feed yourself. Now, what's the mechanical translation to hesitation, which is lack of trust? Create a mechanical checklist confirmation system. That's what you have to do. Why? Why a checklist confirmation system, Zeke? Because you just said you lack trust, meaning you need to have more conviction within your trades, meaning you need to revalidate what you already know. You need to prove to yourself that you are actually correct. So you make a checklist. So when you know you're going throughout these trades and you're going throughout the week, If your checklist is proper, then you're building up that trust again. Think about it, yo. When you were a kid and you did bad in school, nigga, they had a checklist. They always had some type of list or board to show you your progression. So do that. Overcome. People say overconfidence. Same thing. It's just oversized lots. When you have overconfidence, what's the cause of that? Oversized lots. Because guess what? You can be overconfident. People say, "Oh, I have a problem with overconfidence. Like I'm overconfident." Like, no, you position size too much. Your position size is too high. You can still be overconfident. Overconfidence is not bad. Hesitation is not bad because people will perceive hesitation as intuition as well. I hesitated because my intuition told me not to take that trade. Or somebody can revenge trade, but they revenge trade out of pure intention, meaning they knew that trade, they lost that trade, so they intentionally took this trade the next trade out of pure logic to make their money back. That is another form of revenge trading. I'm trading to get revenge. I don't mean it's fucking bad. If someone beats your friend up, you gonna want to beat their ass back. I don't mean it's bad, bro. It's just revenge. So it's about how do you look at it? How are you gonna go about revenge trading? Because the issue is not revenge trading, it's emotional recovery. Fear of missing out. Next one. Chasing price. That's the real issue. I fear missing out. Okay. What's the cause of it? I chase price. All right, bet. So all you need to do is to assign yourself a maximum. And now you know that if you lie to yourself, you're just hindering your trust. So y'all already got the file to this. So now you know to make sure that these 5 things are not in effect as you're trading. Now, I'm going to say this, and this is real important. It says, every flaw becomes fuel once it's converted into a mechanic. I have not once said that these things are bad things, because they're not. Every flaw becomes fuel once converted into a mechanic. The goal is not to eliminate emotion. That's impossible. Instead, we build mechanical guardrails that channel your natural tendencies into profitable outcomes. Your psychology becomes your edge. He said Brodesky. Yeah, he do be saying. All right, so look, I'm gonna give an analogy. Y'all know, like, when they say kids have ADHD, and like they just say like, yo, they be off the walls, they can't listen, they be like, you know what I'm saying? You say you put that same kid in a category, or you put that same kid in a classroom where they actually like this shit. Like, take a kid that is very that can draw, they're very artistic, and they can go ahead and sit there in an art room and really draw and paint and all of that. They instantly become subtle, calm, and chill. We all have ADHD when it comes to fucking trading. Okay? Understand that. We all have ADHD. Why? Because the government and the fucking world made us fight for this money. People lie, steal, kill, cheat for this bread. So naturally, you're going to be on a high note. And you can't stop that. So how do you use it to your advantage? Simple. It says each trader's intrahuman design dictates their capital preservation mechanic. This isn't about arbitrary rules. It's about converting your psychological profile into a risk system that matches your DNA. Like I said about the ADHD, right? About the kid going somewhere where that they thrive and they focus rather than being in a classroom learning math. It says your capital preservation strategy must align with your emotional stability, confidence patterns, and focus capacity, and reward discipline. When these factors synchronize with your mechanics, consistency becomes inevitable. Consistency becomes inevitable because the way that you're trading suits you. Why the fuck would you fail when the way that you're trading suits you? Different. So I say eat the meat and spit out the bones. Take what you need and don't take what you need, because not everything we teach is meant for everyone. Right? Real. I don't even need to go through all of this. I'm not even going to go through any of this. Just this right here. Reflection and integration and commitment. It says, completing your diagnosis and receiving your breakdown is only the beginning. True transformation happens when insight becomes integration. I'm going to say it again. True transformation happens when insight becomes integration, meaning when I make you aware, you have to apply. Insight, integration, aware, apply. The 2 I's, the 2 A's, however you want to put them. True transformation happens when instinct becomes integration. This reflection anchors your this reflection anchors your new mechanical framework into sustainable practice. I don't like to do what's just obtainable in the moment. I don't like to take all the big ass traits. I want to take what's average. I want to take what I know that I can get, and then I become my own food source. I take what I want. Not what I want. I take what I know I can get. I take what's guaranteed. I don't fucking trade for hope. I don't care about catching a big trade. I care about getting into my 786 in confluence with a holy grail bullish reaction off of a goddamn order block. Take it, that's it. And if I lose it, I take it again right under me. If I lose that, I'll take a buy when it breaks out. I'm a hit. I know I'm a hit regardless. It says take your time to process what you've discovered about your trading nature. The mechanics mean nothing without conscious commitment. Execute them. The mechanics mean nothing without conscious commitment to execute them. Mechanics mean nothing without conscious commitment to execute them. Meaning I'm wasting my breath for every motherfucker in here that's not going to really apply this. So for the people that aren't going to apply this, I'm not talking to you at all. And you got self-discovery questions. It says, your trading identity. You are not adopting someone else's system. You are becoming the trader you already are. Mechanically refined, psychologically aligned, and structurally designed for consistency. I talked to Ramel about this the other day. Consistency compounds before capital. I can be a 12-year-old kid and I can go outside and cut grass for a week straight. Then out of nowhere, since I was consistent, I start making money. The consistency bar, like a video game, has to be full before the profits. I mean, how the hell you gonna make money properly and sustain it if you don't be consistent first? You are not adopting someone else's system. You are becoming the trader that you already are. It says, return to this reflection regularly. Your intrahuman design evolves as you develop. Mechanics adapt and psychology matures, but your core trading nature remains. And you know exactly what to work with. All right, so that's it. That's all I got to say for my session. I should have started at 1:30, but Ramel, pick up my goddamn time, stupid. Stupid legit. Let me stop. But that's about it, y'all. I appreciate y'all for coming up here, man. For real. There's a lot of y'all up here, and most of y'all really stayed. So I appreciate that. Because a lot of y'all didn't have to stay. I know me, I wouldn't have. God damn it. Yeah. You know how many live calls and webinars I've been on? So I appreciate it, genuinely. I appreciate y'all staying. Or not. I'm saying I tried to keep y'all retained as much as I could. I wanted this to low-key be life-changing or pivotal. I really wanted this to be pivotal. Like, I really genuinely wanted this to be pivotal. So that I don't have to do this again. Because at the end of the day, come on, it's 2025. The world is hard. I don't like doing this shit, and I don't want to spend time on this. So I made sure after all the time I have spent, all the time Romel has spent, I'ma just play my part and make sure that this fucking video does what it needs to do across the entire board or whatnot. Yeah, that's the fibs and that's intrahuman design. And I sent y'all the file for capital preservation. So, and then you got Romel, Mr. Know-It-All, and Tyrell, Mr. Know-It-All. Niggas that will tell you the why behind the goddamn universe was created with 13,675,322,487 stars. And I'm just like, shit. And them boys just be going crazy. And I can't do it, bro. I be sitting here like, I wish I could do that. Like, nigga, I want to sit here and be like, bro, I just caught an SMT divergence off of an inverted fair value gap. London session market open after Asian session swept liquidity. Nigga, what? The flex. Boy, in everything I just said, it made sense, nigga. I know it did because I know it. I just can't apply it. Like, I know it. I can't apply it, bro. I can't do none of it. None of it. Like I can't, bro. So I commend y'all on all of that. Like, because some of the thing is, like, it's like I know all of that shit. I just can't do it, bro. I've been trading for a minute, so it's like, damn. Yeah, exactly. I know, boy. I just don't dribble that motherfucker, nigga. I bought one of them electric shits. My shit, well, what? I don't gotta even shoot the ball, gang. What is you talking about? I got them electric things. What you mean? You just throw the ball in and it shoot itself. I know exactly what I'm talking about. The electric ball shooter thing, man. But yeah, I appreciate all of this genuinely. Like, appreciate y'all for staying. Like, this is what we do right here. This is just my first official. I would say this is my first official my first and last. I'm not doing this like an official commitment to the entire community and showing y'all what I have to show in priority. This is what the fibs are, and this is how they align with everything that Romel teaches. And this is my perspective based on intrahuman design, understanding you before what I say. Because if I teach you, it may be good for everyone, but it may not be good just for you. So that's that. And man, yeah, bro. Hey, y'all got actually before I hop off, y'all have any main questions to like that's worthy coming up here to say or ask? You got a question to ask or whatnot, you can come right up here. If not, I'm out and Romel can come up. If he's done, then we will catch y'all another time.